What's up, everyone? Welcome to our panel, Understanding the Future Role of Stablecoins. We've all already been introduced by our lovely host, so I'd like to just jump straight into it. And first off, give our panelists an opportunity to just quickly explain why they're on this panel. So, Joao, I'd like to start with you. What exactly is your job, and how does it involve you with stablecoins?
Sure, thanks for having me. So I'm VP of product for Circle, and I'm product lead for USDC, for US dollar coin. US dollar coin is a fully fiat collateralized stable coin that the Circle built, and then collectively with Coinbase co-founded a consortium called Center that back in 2018 that basically governs a set of frameworks for fiat tokens on public blockchains, USDC being the first flavor of that. So we brought USDC to market in 2018. It's been pretty successful since then. We are approaching $3 billion in circulating supply. As I said, it's a centralized stable coin as far as the reserve solution for that. And 2020 has been fantastic, I think, in terms of admiring the growth and the interest that we're getting, from a very broad set of use cases and industry participants. And I'm sure we're going to talk about that in more detail, but I basically live and breathe USDC on a daily basis.
Awesome. Gregory, what about you?
Hey, yeah, I'm Greg DePrisco. I'm the head of business development at the Maker Foundation. So the Maker Foundation is the bootstrapping entity for MakerDAO, which is actually a decentralized organization that manages the decentralized stablecoin DAI. And DAI is about to hit, hopefully soon, $1 billion in circulating supply. And it's having quite the year as well. So yeah, but like Joao said, I live and breathe DAI like he lives and breathes USDC.
Awesome. And Raghav?
Yeah, hi, I'm Raghav Chavla. So I work at Fidelity Investments in our innovation lab, which we call Fidelity Center for Applied Technology. And within that, I lead new product development, mostly in the crypto blockchain space. And we kind of look at everything in the whole space, from like primitives down to MPC and ZK, zero knowledge proofs, to core blockchain protocols, utility tokens, security tokens, stable coins, self-sovereign identity, governance protocols, kind of the gamut of things that exists in this decentralized Web 3.0 space. And as part of that, we try to leverage these technologies, first of all, to learn and experiment with them, as well as to educate the rest of the firm so that we can use it. We work very closely with our existing business units to see how we can incorporate some of these technologies in our existing business lines. And we also develop entirely new products and services, and even launch new companies in these spaces. And of course, stable coins are very important when it comes to any sort of financial use case, because people like to denominate their trades in their fiat currency or US dollars or something. And so I think stable coins is definitely a very, very relevant space.
Great. So in order to understand the future role of stablecoins, I think we first have to take a look at how stablecoins are functioning right now in the current crypto ecosystem. So I'm really curious to hear what your guys' thoughts on the current role of stablecoins are. Greg, I'd like to start with you first.
So currently, a lot of stablecoins are being used to provide liquidity on other DeFi protocols, and DeFi just stands for decentralized finance, if the viewers aren't familiar with it yet. But I think it's more important to look at where they're going, because this is very much a speculative industry at this point. And the way that at least we envision it at the Maker Foundation is that this is the future of having a bank account. You shouldn't have to go to a bank and deal with paperwork and all of the other necessities of dealing with a legacy entity like that, when you can just have digital cash in your pocket.
Mm-hmm. Would anyone like to respond to that?
Sure. Yeah, I can add to that. I think I think the core role again is because people think in a particular currency, usually in the fiat currency where the country that they were born in, and so when people are making trades, they think of a store of value as their core fiat currency, and then everything else is like an asset that they're trading. And so when people are making those trades, they like to have, like a US dollar or a euro or whatever it might be in that coin format, on the blockchain token format, so that it's easy for them to make trades, and they're not kind of moving fiat into bank accounts and converting into crypto and whatnot. So I think that's kind of the central role in my mind for stable coins. And I agree with Greg. Like I kind of do, the analogy with kind of the future of bank accounts. But I also, and this is nobody knows when or how this will play out. But in terms of the role of central bank issued digital currencies, because once the U.S. government issues a crypto U.S. dollar, then these collateralized sort of third-party custodian model or even decentralized protocols where you have to kind of put up some assets first in order to generate a new token, like then that kind of future becomes a little fuzzy, because what's the role of like a USDC or Maker when you can use a central bank issued digital currency?
Mhm.
And I think at least for the next decade or more, whenever those things play out, I think existing stable coins definitely play a pivotal role in the progress of this industry.
Mhm. Yeah, I like how forward-looking you guys are, but just don't give us all the juicy details just yet, because we wanna save that topic for next. But Joao, I'd like to give you an opportunity to give your opinion on what you think the current role of stablecoins is right now. Raghav just mentioned how he sees it as an easy way for people to gain access to trading cryptocurrencies. In your view, does your view differ at all from that?
No, I think that's precisely the case, and there's a lot. We share the vision that Greg mentioned on the Maker and DAI side, but there's also just a ton of activity that's happening, or especially if you like to go back in history a little bit, at least the history of USDC. I think stablecoins really exploded, even though Tether is a little bit older, so to speak, as far as the solution goes. But stablecoins really sort of catapulted themselves into mainstream crypto markets sort of around 2017, right? That's when you start to see significant growth. We launched USDC in 2018. And at that time, we knew that there was going to be a clear product market fit, and we chased that, which was, what Raghav has mentioned. It's basically an on-ramp into crypto capital markets, right? And sort of this stable rails for people to either arbitrate between platforms or get in and out of volatile positions. So I think that was the primary use case, and that continues. It's still important, right? But what we witnessed, and I think this is really interesting, would love the opinion of the guys as well, is that 2018 then was sort of a year of introduction of a lot of these solutions to market. 2019 as a year where crypto was kind of retraced a little bit. There was growth, I think, across the board, but it wasn't significant. And perhaps it was one of those phases in crypto where people were concentrating on building, instead on the speculative side. And now in 2020, then we see tremendous growth, and now we see you see the breadth of use cases like amplifying a little bit more. As Greg said, you see a lot of money markets and DeFi basically exploding now, and people being able to have liquidity in forms that weren't present before, and leverage in forms that weren't present before. And I would love to mention as well that even today, even though it's early stages, but you are already seeing stablecoins like USDC being used as really an on-ramp and a critical part of even commerce for digital goods and NFTs and things like that. There's a lot of very interesting companies that have real life customers and goods being commercialized in these platforms as well.
Yeah, actually, if I can quickly add to my point,
Absolutely.
One of our largest current markets is Argentina. And this is because the population there has a strong demand for a decentralized, stable store of value. The reason they want it to be decentralized, we believe, is that they get haircuts from their banks basically every election cycle. So like when they elect a new politician and that politician comes in and says, well, we're going to apply this level of inflation effectively to all of the US dollar balances in our banking system, they want to hold something that's outside of any banking system. And that's kind of the value.
Your audio's going a bit haywire. Say something again?
Sorry about that.
Okay, yeah. You want to continue?
Yeah, I was just saying that while DAI, the demand is for a decentralized stablecoin, DAI itself is backed by a variety of assets, one of the largest ones being USDC.
Okay, great. So now I'd like to move us in a more forward-looking direction. As you, Greg, and Raghav were already jumping the gun a little bit there. So Raghav, I'd like to give you the chance to kind of kick the ball off on how you see the role of stablecoins evolving. We've already mentioned them as a payments on-ramp into a lot of markets that wouldn't necessarily be accessible for people in countries outside of the US. So how do you see that role of stablecoins evolving in, let's say, the coming decade?
Sure, yeah, and it's hard to predict because there's, I mean, lots of factors, legal, regulatory, general, appetite for people to kind of look at other assets apart from their native fiat asset that they grew up with. But I think, first of all, there's a sort of transactional aspect of any of these things that we talk about, right? And of course, in this decentralized DeFi cryptocurrency world, we want everything to be represented as a native blockchain token, and which is why, we have all these crypto assets, and like we talked about with for the ease of trading and moving in our positions, we would like that, the asset that we think of as money, which, let's say in the US dollar, we want that to be represented as well. And so I think that kind of brought this need about, and that's why, these multiple stablecoin projects came about. Now, looking forward, there's lots of questions, right? So one I already raised, which is, okay, what if the Fed itself offers you a token that you can, trade peer-to-peer, just like any other cryptocurrency or any existing stablecoin? Then, the role of a stablecoin becomes a little bit more questionable because, why should I have a token that somebody else is holding, or whether a smart contract is holding it, and the collateral behind it? And then, there's sort of this counterparty risk that comes in when you have these third-party custodians involved in the system versus just directly having the Fed, issue the token. And even not only from a counterparty risk perspective, but also from a spread perspective, because when you have that counterparty risk, the value of, say, a Tether versus a USDC versus a DAI, although technically it's, pegged to a US dollar, but there's other factors where people may, want one over the other, may value one over the other, but a US dollar is going to always be a US dollar. Now, the question is, okay, Fed's printing trillions and trillions of dollars, and cryptocurrencies are becoming more mainstream. And so will people start thinking of, not really wanting to use their native fiat currency as their store of value, and maybe they go to Bitcoin. Like, Bitcoin is my favorite stable coin because it's always 100% stable to Bitcoin. And so if you start thinking about Bitcoin as money, and I don't know if and when that'll happen, but that's a possibility. And then then it's like what constitutes a stable coin kind of becomes a fuzzy question. Another sort of broader definition of stable coin that I have is kind of like commodities. So, we used to have a gold standard where the Fed would like lock up a bunch of gold and issue you a bunch of IOUs and pieces of paper, which you passed around. Now there's people, creating these gold tokens as well. And perhaps that's a kind of a stable coin that's stable relative to the price of gold. That people start using as well in their store of value or trading activities as well. So I think there's like a number of reasons, a number of directions that this sort of stablecoin space could go in.
So just to clarify, you think that like the number of use cases for stablecoins will begin to diversify, and then that will cause the definition of a stablecoin to become a bit fuzzy? Is that what you're saying?
Well, I don't mean the number of use cases. I mean the role that it plays. Because again, if you think about the role that it plays today, is that it's a store of value which people kind of think in their minds as this is what money is, because this is the US dollar or this is the euro, and that of course plays a role of money in all your trading activities. But what I'm saying is, if people start thinking of other things as money and saying, okay, fine, gold is my primary store of value rather than US dollars. Like, I want my safe haven asset, like when I don't think that this is a risky trade or position that I'm holding, this is just money. That could be gold, that could be Bitcoin, or that could still be US dollars. And if that is still US dollars, even then it could be, if the central banks start issuing native, digital currency tokens, then the question becomes, okay, do I go for a stable coin that's custodied by, a third party or by a smart contract, or should I just use what the Fed issued?
Okay, Joao, I'd love to hear your thoughts in response to those ideas.
Yeah, honestly, I see things a little bit differently. we are much more interested in what's happening right now. There's a ton of traction in terms of what's happening now. We obviously monitor what central banks are doing, but we also know that they move at a glacial pace, right? Right now, we are interested in, as I said, in the growth that we have seen in 2020. That pretty much indicates that that is already a maturing market for, especially around what we call business to business use cases. So things like cash management for businesses. I mean, there's a significant amount of businesses asking the question today, what is this thing that I can put this, stable coin that's basically valued at the same cash that I have on my bank account, but it gives me 10% return a year? I mean, what is this thing? Because I'm interested in that, right? And that's a pretty clear value add for businesses, and we see a ton of traction there. I think the flight to safety that Greg mentioned is something that we also see growing in emerging markets. And throughout the pandemic crisis, it was pretty clear that in a lot of developing markets, people were desperate to hold stable value in the form of dollars. And when you are in the countryside in India or in Brazil, you don't have access to a dollar-based bank account, but you do have access to a mobile phone and an internet connection, and therefore you can just hold DAI or USDC or whatever you want, and it's effectively the same. We, on the Circle side, we work a lot in building platforms that basically connect to USDC for developers, and we're seeing a ton of traction for things like settlement for commerce, B2B payments, cross-border payments. Those are real use cases. Those are happening right now, and they are compounding the growth that we see. As I said, we're approaching $3 billion in circulating supply, which is tiny in the great scheme of things, right? But the compounding growth is really interesting. I think FX is another near-term interesting opportunity that we see people asking about. Can you represent all these fiat flavors in public blockchains, and can you do FX markets in a more efficient way? Basically, we think, and I think the other element that to me is really interesting about these stable coins that folks like ourselves and Greg and Maker are building is the programmability and the composability that comes from that, right? I think it's really hard to fight that, because that's basically an unstoppable machine, right? DAI, as Greg said, DAI is backed partially by USDC, so there's a composability element there. I can build my own coin for my own game today that's just a wrapper around USDC, and I don't need to ask for anyone's permission to do that. The ability for developers to continue to build and entrepreneurs to continue to build on this infrastructure is basically infinite right now, and I think that's where the growth is going to come from in the next couple of years.
So if you had to distill all of those ideas down to like a sentence or two on how the role of stablecoins specifically will evolve, how would you do that?
In one sentence, that's tricky, but I think it's the belief that we have that stablecoins can potentially be really a new infrastructure for money. So for folks who have experience building, financial services and applications that have to touch money, and we have a ton of experience in doing that. Quite frankly, it's just ridiculous that the kind of technology that people have access to, right? You essentially are limited to like archaic KPIs, FBO bank accounts, like all this kind of stuff. You're essentially willing to represent value and be able to transfer value in and out of these buckets. When you compare that as a piece of technology stack that businesses from banks down to Uber and Airbnb have to have access to, and you say, hold on a second, there's a slightly more modern and easier way to do that with wallets and APIs and public blockchain infrastructure. The advantage, and considering the speed and cost that those transactions have, the advantage of stablecoin over the traditional infrastructure for money is very clear.
Gotcha. Greg, floor is yours.
Yes, so I think it's very much about the incentives for onboarding, because, and by the way, please let me know if my audio goes crazy again.
I will, don't worry.
But if you don't have proper incentives for onboarding, then you have the best product in the world, your users will never come there. So, and this is where I think that what MakerDAO is doing and what Center is doing they're taking two different approaches, but they're both equally important to actually drawing the average person into our ecosystem. Now, for somebody like Center, they're focusing on the deposits side of the equation. So they're taking existing US dollar deposits, they're making it very easy to convert those into stable coins. And then the user instantly has all the benefits of that stable coin, like the ability to send what looks like a wire transfer in 17 seconds when that used to take 17 hours. The other side of that equation is what MakerDAO is doing, which is the liability portion, where we seek to onboard stablecoin users by having them denominate their debts in our currency. So the way that MakerDAO functions is you bring an asset to our protocol and you're able to borrow DAI against that asset. You then go sell that DAI to somebody who's seeking stability or yield, but you now have a debt that's denominated in this stablecoin. So really, I view those two funnels as both sides of the equation that will over time bring tons of users into our ecosystem.
Gotcha. So building up a bit more onto the next one is the question really is, where do stablecoins have the most untapped potential for impact? So like what use cases, what markets, where can stablecoins have an impact, a dramatic impact that they're not having right now? And Raghav, I'd like to hear like if you have any such use cases or markets that are on your radar at the moment.
Sure, yeah, and and kind of I agree with all the stuff that Greg and Josh just talked about in terms of how stable coins are used, and like even when I was talking about the future of it, I was kind of going quite far into the future in the sort of long-term grand scheme of human civilization type stuff. But I mean, more immediately, pretty much anywhere where money is used, right? So I think right now most people are using it. We talked about like for trading activities, for getting in and out of positions real quick. But essentially, a stable coin is, if the monetary aspects stay the same as the traditional financial infrastructure where you have US dollar, but the rails are these blockchain rails, which give you all these magical properties like peer-to-peer and private and smart contract programmable. And so, so of course, like we talked about trading, but even I think Zhao mentioned cross-border payments. We at Fidelity have actually even experimented with, we have businesses across the world, and just moving money from one business from another country to another business that we own, so it's not even a third party. We have to go through a third party bank and pay fees and whatnot, but we could just use stable coins to kind of make that process a lot quicker and cheaper. If you kind of expand that even further and think about trade finance, where people are shipping goods all around the world, and that's a nightmare as well in terms of like the moving money around when you do that. But with stable coins, you can make that super simple. You could kind of add a smart contract aspect in there as well, where whenever delivery confirmation is received, funds are released instantaneously, and it doesn't matter what country you're coming from. You don't have to worry about having 30 bank accounts all over the world trying to move money around. You just on your phone click a button. And even down to the consumer level, like I mean, people are using Venmo right now, and or PayPal or Cash App or any of these things, which again are third party centralized, where somebody has all your financial data, and but with people could start splitting the check or after dinner just using a stable coin. It's kind of like passing cash around, except it's digital cash. So I think there's like a lot of use cases, and of course, like even in the traditional securities industry, so people are talking about security tokens a lot these days, and any institutional trader wants to again denominate their trades in US dollars, and if you can with stable coins, you can have atomic swap, so your delivery versus payment is instantaneous as well, and settlement is instantaneous, and all that good stuff. So I think there's like basically anywhere money is involved, stable coins play a giant role.
I hope someone was keeping notes through all that, because that ended up being a pretty big list. Joao, do you have any specific use cases you'd like to kind of double down on?
Yeah, I can share a couple of things that people have exploring, some of the customers that we deal with or the prospects that we deal with, because I think Greg might be better positioned to talk about the bear and the consumer, element of those use cases. As I said, we tend to be very interested on things that enable businesses, and one of the things that we are seeing is, and I think in terms of untapped potential, it seems that everything that is connected to business payments, whether it is cross-border, has an element of even more advantage for stablecoins. But in general, business-to-business payments tends to be, first of all, it's obviously a huge market, right? There's a lot of subsegments to that, but there's a lot of untapped potential. The way that I hear some of these conversations taking place is that imagine And I'll just mention by way of example, right? There's nothing to do with stablecoin going on there, but I don't know if folks know how a system like TransferWise works, right? So TransferWise essentially has a ton of bank accounts all over the world, with banks all over the world, and then users, they think that money is actually being transferred from, you know, end user A to end user B, and it's not really. It's transferred at the borders, right? So essentially, TransferWise keeps a lot of pools of money in all these different bank accounts, and it's essentially settling between an end user and the closest bank account to that. And then once that settles, they use the pool of money closest to the end user, the recipient side, to do a settlement there. That's tremendously wasteful from a capital usage point of view, right? Essentially, you have to hold a lot of working capital across the world, and they are very efficient in how they balance the usage of that capital, but there's a lot of inefficiency there. The inefficiency is there basically because it's just too freaking slow, right, to move funds, say, from a bank account in Germany to a bank account in the US, for example, and even slower in some other cases. But it's actually not slow if you just move stablecoin, right? It's pretty darn fast. And still, just as the end user today doesn't know that they are actually dealing with Nostro Vostro accounts and, like, you know, all this disparate infrastructure, they don't need to know as well that these businesses can be using stablecoins behind the scenes. And that's where we're seeing a lot of interest, because people realize that, as I said, this is just a slightly different implementation for these use cases. It doesn't touch the consumer at all. The end user experience is still the same, but it's tremendously more efficient for businesses. I think that's where there's a lot of untapped potential.
Great. The last 2 minutes are yours, Greg.
Yeah, so just to expand on what Joao was saying, you know, and to distill into a sentence, I look at the legacy payment rails like using snail mail. So you're writing a letter, you're putting a stamp, and you're going through this whole process. It's very inefficient. And I look at stable coins and blockchain protocols like email. And I think, you know, to answer your question, where are the use cases? Well, where was the use case for email and communications? It was everywhere. But there's different email protocols, and this is why you know, it can be confusing for the average person to see that there's actually a number of stable coins all doing slightly different things, even though they all look the same. Like, for instance, USDC's core competitive advantage in my mind is that it has almost unlimited liquidity, and because of that, it's a really excellent payment currency. If two businesses need to transact overseas, I would recommend you use USDC to do that. For DAI, we have the benefit of being completely outside the legacy banking system. So our core advantage is that we generally have higher interest rates on DAI than any other dollar deposit. And it's not even a deposit, it's a blockchain token. Now, the way that this can really manifest itself is, as I mentioned, DAI is originated from borrowers. So if the protocol starts giving out loans to large originators, it can actually start creating capital in the legacy economy and then passing some of that interest margin on to DAI holders. So I think the takeaway here is that you're going to see a variety of different stablecoins, all doing slightly different things based on the competitive advantage that comes from their architecture.
Gotcha. Well, guys, it's been a great panel, and thanks so much for joining us today.
Thank you.